Alrighty then. Hello, everyone. We are doing a quick check in on how trades are performing and what is going on in Mr. Market. The ADAPT Daily is doing freaking great, pushing up into all time highs. We have collected after winter recently, and it's just what happens when you get the environment right. You can see here we've had buoy trades, we've had surf trades, we've had reef trades. More about that on the website if you go check us out at etradingedge.com. Our behind the scenes membership is completely free, so you can learn what these trades are back there. More on that later. As far as Mr. Markets are concerned, last time we talked, we were up here at the very highs. We can even see it posted on this YouTube channel that we knew markets were pretty lofty. We knew that there was some tightening going on, and we knew that we were likely going to roll over. How much so is always up to Mr. Market. So we had a contraction. It looked like we were probably going to stabilize somewhere around here as the reverse repo market drained out. And that looked like we were going to have a relatively good bounce. Of course, that was not what Mr. Market decided to do. Bam! Reverse repo market stopped draining, kicked back up, and the meltdown continued. We covered our gap back here. This is very important on a technical basis. We popped on our pivots right here, and we have now rallied. We can do one of two things at this point. Of course, we can continue to drain the reverse repo market, which is what it looks like right now as of the last couple days. And this should be enough to push us up back into this volume area that we have up here and stabilize markets until we roll over again. That's what two of my plans are at the Adapt Advanced that we have right here. And then the other side of things is this reverse repo market continues to stabilize right around here at this 400 billion level. The Fed is not due to reverse their quantitative tightening at all until their next meeting. So that would likely push us all the way down into some of these more major volume areas down here at 4,700 to 4,800. This would be a relatively normal spot for us to get down to, and then probably bounce from there. Honestly, we still got more gas in the tank of this. We've got 400 billion down here in the reverse repo market. The Federal Reserve can stop their quantitative easing. We can start pumping up financial markets like crazy. As long as interest rates stay elevated, we likely will not risk CPI blowing up into the oblivion. Now, inflation doesn't go away in one step. We look here at Mr. Inflation, we can see exactly what's going on, right? We had this big spike originally from post-COVID, from them printing a bunch of money and giving it to everyone, especially consumers. And of course, when consumers do that, there's consumer price index, right? The CPI will crank up. This is where the spike came from, along with supply constraints. Supply constraints worked out on their own, along with some raising interest rates, helped pull this down in this relatively okay area of 3%, but you can see it is not going down. And in fact, we have reaccelerated back up to 3.5 over the recent months. Our core inflation is also hanging out really strong up here at this high end. It is not getting down into this area that the Fed really wants it down into. This core inflation, they really want this down here to this 2%. That's not because of the necessarily printing from the markets that they're doing. It's really in the fact that we haven't allowed businesses and interest rates and financial markets to actually tighten. In fact, what we did is we raised interest rates. The supply chain has normalized. But then what we did is, as you saw, and as we've pointed out many times before, the reverse repo market began draining so much that it helped stabilize financial markets and remove a lot of risk of the actual economy and financial economy to contract. And when the financial economy starts to contract, that's when get an economic contraction shortly after that. So 2022 was a simple deleveraging, and then now we are set up for, if this starts to drain out and we do get an economic contraction, a relatively large correction is what is likely in store for us in the future. But we still got more gas in the tank, so we can get a bounce and then a contraction Doesn't have to go down into zero for us to have the remainder of this recession here. So we'll see how it all plays out. Reacceleration and inflation, the market rolling over, having a good time no matter what. Doesn't matter if the markets are going up or down or sideways. We have been making money this entire time. So if you're not already a member over here at etradingedge.com, come over here, check us out. ADAPT Daily is a fantastic trading system that we developed a few years ago. Check it once a day, no adjustments, nice and simple, based on the SPX, lots of liquidity, lots of fun. All right, I'll talk to you guys next time. See ya.